Good morning, everyone, and welcome to the European crossover webinar. And we've seen the dollar yen really finally make that push above 110. The resistance actually we've had has been 10.10 on a closing basis, and certainly we're above that right now. We'll need to go and see if we can hold that above that, till the close. But certainly we've turned things around here in the dollar yen. We'd seen that pair back in the dollar yen when equities came under pressure on the backdrop of the Apple news, Apple warnings, I guess we should say, and then we held. Remember, our bias chart support had been 964, and we held that. I think we may have dipped a little bit below that. No, I guess we didn't, because I think it came to within 1 pip of that, and it held in. Figured it'd probably be the same old thing again. We rally up there and we hang around, but we've finally punched up above 111. So it's going to be rather interesting to see, how that goes and plays itself out. And then looking across here, dollar peso, as you can see, hasn't really moved that much at all whatsoever. I thought once again on the with the pressure that U.S. equities came under. Initially, yesterday, I thought that we would probably go on and see a far better rebound, but we did not see that when it came to the peso. I thought we would have seen somewhat bigger move associated with that, but that move stayed rather restrained. Although we haven't fallen a whole lot any further, but at the same token, I would have expected more in line with that. Now looking here with the dollar CAD, you can see here we've slid down a little bit. I think we had our support coming around 32, 30, I believe it was. So we've gone and made that move down there. Bear with me. I'm just updating some economic data. Sometimes it resets itself, so just making sure that it had some entered. Bear with me. Also, the Aussie dollar continues to remain rather weak. We do have employment data coming up, and the concern is that that's going to go on and tick on up to possibly, I think they're looking at possibly as high as 5.3%, and certainly that will go way on that. We know that the chances or percentages of interest rate cut have dropped all the way down to really into May, if not even later than that. But the thought is that if it does go and jumps up to 5.3, that potentially that we will go on and see that those figures change and increase. Looking with cable hasn't done anything. It stayed in a rather tight zone. One of the things that we had talked about is we said how many times that the bulls have been fooled. And we thought that, remember from the prior week, we had looked for potentially an intermediate target of 28.98, and we made it down to 28.98. I think we only took it out by a few pips, and then we rebounded. But even then, as oversold as the market has been, it wasn't willing to rally much at all. I mean, we just saw some minor short covering. And I think that had a lot to do with how many times that the bulls have been fooled for good moves here and really taken it in the keister. So certainly we saw the market move up a little bit from its oversold area, but certainly nothing to go on and write home about. And then we've given that back rather quickly. And coming into today's data, we do have we just had current account just come out here for Eurozone, but really this mover this morning is going to be core CPI here, as well as PPI out of the UK. That'll be at the bottom of the hour. And then coming into the States, we'll have building permits and housing starts, as well as PPI. And then we do have Canadian CPI. As we roll into the next evening, at least for us, it's going to be the evening here in the States. We do have an Australian employment data, and that's going to be, potentially a rather big mover in the impact for the Aussie. You can see here the dollar yen continues to move higher. The next area for them to go on and move to is going to be, we've talked about it before, is 10.52. Now that's just to get to, but our intermediate target would be 111 even. Now we have seen the gold market going to move higher. We're going to get to that. We're pretty close. We've made it almost up here to an area that comes in at right around 16.14. Looks like we ran out of gas just right before 16.13. A little bit of volume up there, but we've already had that move. And really what precipitated this move, remember, was we've been looking from the prior week, was that if we got a 2-hour close above 1580, the first target for them to shoot for was 1591. We got that. I think we had actually come up like about 50 cents short or something. We dipped back to about 87 or something like that. And then, or not even that much, maybe only 88. And then we launched higher yesterday. We made it up to around 1607 or so. And then we paired back a little bit. We were rather quiet in Asia. If you look in here, the market was very, very quiet. With me right here. Very, very quiet at 1604. And then we finally, as we started to move into Europe, finally we started to, make a move here for that. You can see here we took out those highs, getting up to about 1608.5, a quick dip back, holding at the VWAP. And then from there, we've continued to move higher. And we have an intermediate. I was hoping we were going to hit this yesterday because I thought we'd see a nice reaction back, which was hoping we would have hit yesterday if the SPUs had broken lower, but they did not, which was to hit that 1614 and then paired back. But the SPUs ended up holding, or indices did, and then we saw the gold market pair back. And of course, as I mentioned, quiet time in Asia before we start to be, if you can see here, we finally get above the VWAP, and then from there, it's blue skies ahead. Next year is on the crude oil market. I thought we might even be able to punch up to this 53.13 in Asia. I was watching it rather closely. We did have some resistance right here around this 52.95. The market really couldn't even get up to that area. It was really having a tough time, and then it would dip back. It was very, very quiet trading, and then start to move a little bit higher. Then it dipped back. I thought we might get a spring of stops up to about 52.13 and then pair back. That never came to fruition, and we've stayed rather quiet. It was interesting market anyway. If you look here, look how you had the volume right in here, a bump in here, and then the market just goes dead. And then we rally on that area here. And that's why I thought, boy, if we pop up to above $53, we should see a nice little pair back. But never did quite make it there. And despite the way it looks here, it was rather kind of herky-jerky and very, very quiet overall. And we've just kind of consolidated here. I thought yesterday was very interesting. On the back of that, the Apple news or expected shortfall in revenue. We had seen this market, which had actually pushed higher on Monday. Here was Monday right there, pushing, Monday was obviously President's Day. We're very quiet trading. And into the close, we punched up higher, and I said, hey, look, this market is open to moving up to 52.95. But that's before the Apple news came out. So the Apple news came out, and the equities were under pressure, and this market went down, down, down. I mean, we did not even have an upside reaction whatsoever. If there was, it was like maybe 15 cents, literally. If I were to say it's, a little bit less than 20 cents, it's probably a little bit of a stretch because it just would not rebound. It was just a steady grind lower. So it just wasn't one fell swoop, and we just kept moving lower. We did go in and hold in here, and then the market turned around and tried to make a run up here towards 52. We backed off, and then the market asserted itself going into the close and said, hey, look, you know what? Hey, 52.95 is back open. It's back open for business, 52.95. And certainly we almost got there, you can see here. And my thoughts were yesterday is that potentially we can see this market get up to 54.14. I'll show you where I'm coming up with that. Right up in here. Bear with me. Right here, you see, and we can also take a look at it here on a weekly. The key is if we can get this, if we get a weekly close above 52.84, we've pretty much put the bottom in place on here. But I mean, it's only Wednesday, so we'll see where we come here. And as mentioned here, here we are moving. Here's that 53.05. So I thought we might be able to get above it. This is on a daily. It's going to be key. Once again, if we do get that close above 53.05, 54.14 is just next. And you can see right here. And it comes to also confluences in here with this little zone here. That would be key if we can get above there. And like I said, we were finally able to get above this 52.44. So certainly go open. I thought that the first movement here would be up here at 53.05. If you look at the 2-hour chart, as I mentioned, 53.44 is to 23%, and here's that 53.13. I thought that that would reflect a pretty good area for this market to pare back a bit and for an area for it to go to. So that's what I was kind of looking forward to. I thought we might have sprung up there in Asia, and I always thought that would have been a nice area for them to rotate lower for about 50 or 60, at least 50 or 60 cents. But we haven't quite made it up there, but it's certainly an area where they'll, look to go to and then maybe take a bit of a respite. But we're open here that that's not that far away unless we can make it in one fell quick swoop. It really opens the door for us to even try and push up a little bit higher. But I think that anybody that's short, I think they're stuck now. This market, after it rallied up in here, and close above 52.44. Certainly looked like it was open to move up to 92, 95, but then we did get the Apple news, and that certainly put the pressure on it. And it was just a one-way street all the way down. And now we finally turned things around, and now we have those same bears now under pressure. And when you look at this, we've got right here this test here. It looks good. And if you look on the daily, look at that daily also from yesterday. So I tell you what, I wouldn't want to be a person that was short in this market. It's certainly not. Like I said, it doesn't look well for them at all. Let's go on and move into the currencies. So the Australian New Zealand dollar is weakened on fears of virus impact on the economy. The Australian New Zealand dollar has nursed losses on Wednesday as risk appetite weakened over fears about the hit to the world economies from the coronavirus outbreak. The new coronavirus has caused 2,004. I'm not worried about the stats anymore. It's meaningless. Anyway, with all due respect for whatever, it has no impact to what we're looking at. The losses on Tuesday came as tech giant Apple said it was unlikely to meet a sales target set just 3 weeks ago amid production and weakening demand in China from the outbreak. The blow to risk appetite saw sell-off in exporter currencies, while the yield curve between the U.S. 3-month bills and 10-year inverted overnight, a bearish economic signal. How many times have we seen that come up? It's called the boy that cried wolf. Meanwhile, Australia's annual price index rose a tepid 2.2% in the final quarter of last year, with pay rewards to the public sector slowing to the weakest pace on record, according to data released on Wednesday. The RBA is predicting the pedestrian pace of wage growth to extend through the mid-2022, as the jobless rate is not seen dipping materially during that time. Minutes of the RBA's February policy meeting out this week showed its board thought easing policy might accelerate the process, but judged the risk of ever lower rates outweighed the benefits. The RBA has estimated the employment rate needs to fall below 4.5 from 5.1 currently for wages to grow at 3% or more. We are years away from achieving those goals, said Kelly and Pickering. We consider it's unlikely that wage growth will improve much during 2020, as we also expect household spending and inflation to remain disappointing. We believe it's likely the RBA will need to cut rates again by mid-year, with a second cut not out of the question. Obviously, the big mover today in the currency markets is the yen. And the yen slips as an infection rate slows. Chinese stimulus is eyed. The safe haven yen eased slightly on Wednesday in signs China was looking to fend off economic threats from the coronavirus, which supported investor confidence as the outbreak spread appeared to slow. Meanwhile, a Bloomberg report citing sources that China is considering cash injections or mergers to bail out airlines hit by the virus also supported appetite for risk. China's yuan remained on the back foot, however, touching a two-week low after the central bank fixed a softer than expected trading ban as investors expected further monetary easing. It's a tug of war between wait and worry and being relieved that the infection rate is slowing down, said Bank of Singapore strategist Ma Sing Sim. As the specific moves this morning are related to the move policy help from China, there's some relief that more help is on the way and it's restoring some positivity to the market. The coronavirus has caused 2,004 deaths. Meanwhile, measures to contain it paralyze the economy and markets remain on edge as the extent of damage to the regional commerce and global supply has become even clearer. The yield curve between the U.S. and 3 months, we already covered that. It's inverted. How many times have we heard that? Like I said, it's the boy that cried wolf. The antipodian currencies heavily exposed to China have lost more than 4.5% against the dollar this year. Investors are looking for the minutes from the Federal Reserve's January meeting due to be released for insight on the Fed's thinking about the virus risks. Once again, I don't think that carries any real weight whatsoever in the bigger scheme of things. We see dips and then we see the indices come back. I mean, not to say we can't take a pause here, but I think they're probably looking for too much. Anyone that's looking for something for those minutes meetings, I really don't see it of any material nature whatsoever. European Pension Managers Index numbers and part month Korean export figures, both due on Friday, are also going to be watched closely for any hard signs or signs of the economic impact. So it's European PMIs on Friday. Here's the dollar index. Now, we had our bias chart resistance, remember, at 99.44, and we've closed right there. But let's go and move on to the analysis. Starting out with the euro. The euro continued its death spiral, finishing sub 108. Weekly support level comes in at 776. A further break could see the market trade as low as 726. Resistance is 846, followed by 883. So support is going to be here at 776. You can see that. And if for some reason we see some kind of quick bit of short coverage, nothing would be nothing more than that. We'd be looking for a stretch up here to 846. And you can see that key support coming in there, 776, and some additional support at 726. So cable finished the day slightly lower in a tight range, or as the pair has not been successful in lulling bulls for another go. We've talked about that. Look, you're just not going to get these bulls to come back. I mean, they've already been fooled, and I mean fooled in major ways. I mean, you're talking about them losing, literally in one day, 150 pips. Well, and then the week after that, I think it was 200 pips, literally in just one day. I mean, so they're not coming back. You see what I'm saying? And why, despite the sell-off you see from here, look, that was a pretty decent sell-off here. You're talking 300 pips. We made it down to that 28.98, and this from the previous week. As we moved higher, look at that. It was just very tepid movement on the upside. And even when we finally got above 29.80, look, no follow-through. But as I said, they've been has not been successful at lulling bulls for another go. Upside resistance remains 30.49 with support at 29.38. Two closes below the pivot of 29.80 will turn the pair bearish because right now we're just kind of in a range neutral. Moving on to the Aussie. The Aussie finished today sub 67. Support remains 66.53 with a potential stretch to a weekly support of 65.28 ahead of the employment data. Resistance is going to be 67.38. So no changes here. 67.38 on the upside, 66.53. As I mentioned, we do have employment data coming up, and that will be key, and really the potential for that to really, knock that lower. And if we do get knocked lower and we go sub 66.53, hey, target straight ahead is going to be that 65.28 on a weekly. And on to the Kiwi. The Kiwi closed on critical support level 63.83. We've been talking about that. You can see that pink line. A break below that has the opportunity to send the pair down to 62.89. Support level ahead will be 63.26, confluencing with 63.23, which would be the 78% of this move. Resistance would be 64.46. So if we do break here, in all likelihood, we're going down here, which is 62.89. There will be a pause because you've got 63.26, some volume here, confluence with the 78%. But if they do break lower, they're going to have to go to an area where we can search for some real value or for folks to step in if we break here, because you'll have these two double dips here. If we break here, they're not going to be satisfied just a little bit lower. They'll get a temporary slight bounce, but we're going to ultimately make a move down to 62.89. So in the meantime, as I mentioned here, looking here at the Kiwi, at least for now, support's going to remain this 63.83. We're holding there. And on the upside, it's going to be 64.46. Moving on to the dollar CAD. Well, the dollar CAD closed higher on the day, but was unable to take out 32.70. The pair is in a stalemate position over the last several days. Upside resistance would be 33.15 with downside support at 32.23. Well, we're close to that right now. So once again, it's going to be 32.23. Actually, yesterday we had 32.19. Let's stay with this 32.19. It's only 4 pips difference, and we're already at 31. And the upside, we'll keep this right here at that, if we had pushed higher, I think we're stuck in this range. It's still rather bullish, but it's susceptible because we just can't seem to garner any upside. So right now we're going to put this day at 32.69. Still bullish. Okay, the dollar peso held steady above 1851, although the rally was rather limited despite the initial sell-off in equity indexes. Resistance will be 1868 with support below 1851 at the weekly level of 1844. And you can see that. That's way the head back here, right here. And we're not that far away, but if we do break, but at least for right now, it's still going to remain 1851 right there, 1868, no changes. Really, actually, it should be closer to like 1865 here. Well, here we are with the cable again. We do have data out at the bottom of the hour. We could actually take a quick look here to see where the guppy stands here. And the sterling odd, a little bit under pressure with the sterling odd, and guppy just holding steady. But I want to go back to the main screen. Yesterday was nothing but short of disappointing. We were highlighting this when the data came out yesterday, and I mean the cable did the starting pairs did not even move at all whatsoever. I mean, at least at that time when it came out. I would expect some further movement here. We're just going to only focus on the pound. And you can see here truly a swath of data here between the CPI and PPI and sub-indexes of those. Core CPI, they're looking for a negative 0.6. And PPI for negative 0.4. Right here on the PPI. Now, for today, we're looking at, of course, we're at the pivot, but we're looking for support at 29.38, and on the upside, it'd be 30.49. So we got another 30 seconds before data. Five seconds. So it came in right in line at -0.6, which was what the Reuters poll was looking for. Core CPI, and look at cable, not even moving. As the saying goes, it's deja vu all over again, just like yesterday. I mean, and we came in negative, well, actually a positive 0.9 on PPI. They're looking for -0.4. Look at that, no movement whatsoever. None. I mean, I think we may have moved maybe 5 pips or something like that. No movement whatsoever to speak of. Well, let's go move into the big mover for today in the currency markets, which is the yen. In this case, dollar yen. We have 10.07, but the key is 10.10 on a closing basis. And yesterday when we took that dip, we actually had it for 987 because it looked like this, hey, this market's going to hold. Remember, we were pressing lower at the time. I think we came on, I think we were close to 964. Yeah, I think we were right there. That's what we said. The real key point is going to be 939. Obviously, we saw a pretty good rebound. The low was, you see from the prior day, the low was, our bias chart was 964. We came 1 pip within that, but we said, hey, look, the key level is going to be 939 if we can get below that. But we've turned around, come right back up, and look, we're at 1023. A daily close above 1010 sends this market to 1052, which that's going to be our resistance for today, which is going to be coming in at right there. 1052, 1051.3. And then the upside challenge would come in right here, the intermediate target, right at 111. But we'd be looking for 1051. If we get that close, I guess intraday before we get there, let's see if there's something we can hang our hat on, which should be this low right there, which would be 1025. So let's go with 1025. Yeah, let's go with 985. Quite the turnaround here for the dollar yen. So looking at the cash dollar index, our resistance had been 99.44 with an intermediate target of 99.77. 71, I believe is 99.71. I don't know that we'll shoot immediately up there. What we'll do is we'll just, before we get there, This is a good little area right here, this 99.44, and we've actually had that in place for a little bit. Let's take a look at a 2-hour chart, see if we can see something a little bit closer. We've actually had it on a 4-hour because there's so much. $99.58. So we'll go with that, $99.58. And support is going to be 99.11. What a move. Look at that. And the reason I had to use a 2-hour, but I had to put it on a 4-hour to get, to condense it. But boy, look at that. Let's go move into the cross rates. Well, we've seen a good turnaround, obviously, with the weakness in the yen, which potentially could move us back up here to this 71.02. Right there. There we go, 71.02. At least for today. And once again, this could be the start of something. We, like I said, well, let's see how we close today on these yen pairs. But at least initial resistance is going to be right there, right there. It's called 70.80. Which we already have before 779. Just move it up here. Support's going to come in right there, which is just below the day's lows, right there. A break lower, you would not want to see that if you're bullish. It's going to be 70.33. And let's go move into the euro yen. And the euro yen looks very similar to what we've seen here with the Kiwi yen. Although the euro can weaken a little bit more, certainly the door's open for us to move higher. And considering the weakness with the yen pairs, resistance is going to come in right there, 19.25. And we'll see how we close the day out. We already had that marked off. And looking for support. Moving to the 2-hour chart. You can see that clear as a bell. Look at that right there. 18, let's just call it 1880. Actually, even lower than L. Actually, even, well, that would actually break it. Okay, you can come back down here and tag this, which isn't even that far away. 1880, yeah. So this is where it would break it right there, which would even take out below the days lows, 1880. And a little bit of a false break here on the euro yesterday. This was just after these, we were stuck down here in this area here. We broke out, we came back, tried to make a move until it fell all apart again. It certainly looks like it would rather go and push a little bit lower, but we're still trapped within this range here. So the upside is going to be right there coming across. You see that? We can actually, bear with me. Right there. Which is going to be 6204. That may seem like a long ways away, but like I said, once we get employment, I can move right back up here. So that's what I'm saying. I think within this range is where we're stuck. So it's going to be 6204 on the upside, and on the downside, 6090. And you can see here, just similar with the euro on in the way that we break lower and we're stuck, maybe not as pronounced, but still stuck in this range here. Upside, I just like this close right here for right now. And that's going to be 68.95. Keeping things tight until they eventually break. And on the downside, coming in right across. We're just trying to find some volume. And certainly it's susceptible to a bit of a break, but I'm not sure that we'll get a whole lot of follow through. So if you look here where the most volume is coming in, will be right there, which would be 67.74. Let's move on to the ASEAN. Now, finally, we could potentially break a little bit higher, especially with this yen weakness. Initially, for today, there's a resistance which we're not able to get to the other day. We thought we might get to, which is going to be 74.18. Figuring we can hit those stops above 74.02. But this could portend for much higher prices if we do see this yen weaken. And boy, it's got a lot of room to weaken if it were to. I mean, when you're looking at with the dollar yen, um, if it goes that path. Um, and on the downside, yeah, right there at the lows, coming across 73.45. Same here with the guppy here. This has been stagnant overall, but certainly if the yen does weaken, we can certainly really start to move higher. But uh, that would come in right now for resistance at 44.02. And this can be the line of demarcation right there, 43.05. And lastly, on the sterling odd, certainly we're open to going and punch up higher. Tonight's going to be key, rolling into the Asian session, I should say. So we're going to be looking here, 94.83, major level. We already have that marked off. And on the downside, right there, right there. You see that? It's going to be 93.38. Yep. Gold's still making a punch up in here. We do have that resistance I mentioned here at 16.14. Let me see right there. Comes in at 1613.2. So we're just a spit away from that. We can take a look here and maybe give it a very short-term target with the fib. Also, 1627 would be the 161% of this most recent range. 1627. And the stops at 1619. Certainly doable. And usually when you see gold run, it'll usually go for 3 days before you see a pause. We did this first breakout today. It would actually wouldn't even be, and actually the third day then would be looking into Thursday. But probably before this thing would slow down would be around 1627. And I wouldn't even be surprised if we jumped in beyond that, went to like 1633 before we took a pause. Taking a look at crude oil, I still would look for crude oil to make a run up here to 53.13. Here's on the daily. We'll back it up here. So you can see here down here, we've tagged this 49.57 twice for 2 weeks. It's a weekly chart. So you got basically a little bit of a tweezer bottom here. And if we get to daily close about 52.84, not a daily close, but a weekly close above 52.84, which certainly doesn't seem far-fetched at this point. We'll put in a temporary bottom in place if we get that close above 52.84 to finish the week. You could even look at this one, might be just a bit higher, like maybe at 52.90. But as long as we can get above, really think of it this way, at 53 or better, you'll have put in a short-term bottom. And shorts will be screwed there. At least I'm just looking at the charts, not necessarily my tape, just saying, look right there. You've already gone sub 50, tweezer bottom. We'll get above 53. We've got 52.84. That's it, short-term bottom in place. But looking into today, you can see here's that key level, 53.05 on the daily, but looking on a 2-hour chart. I like this run up here to 53.13. There we go, right there. You see? 53.13. But potentially we can move up here because if we don't even get to the 23% of this entire move right here until we get to 53.44. So that's what I'm saying, is that you really have a lot of room for this to move much higher. But I think this is an area I would have liked to have seen them hit this in Asia for a rotation lower. But I think we should get to that today, I would believe, especially because anybody that was short from yesterday, they're stuck. They're stuck. And so they were going to impress that. And I wouldn't expect a pause until we get to about 53.13. But the thing is, it's not even that far away now. I would have rather seen it come up yesterday when it was thinner volume and we could have seen that rotation. You can see, look how thin this is down in here. You see that? And then you can see how we built up. So I would have liked to have seen it bump up to 53.13, rotate back down. Right now, we're above the VWAP, which is coming in at 52.65. That's all we have for today. Good luck trading. Thanks for joining us here on the European Crossover webinar.